Hey traders, today we are looking into a scalping strategy of what we've already explained. It's the Chandelier exit strategy, but we did it with the Heikin Ashi candles and now we want to see the results with the regular Japanese candlesticks. Because in the end, I just would not recommend using Heikin Ashi candles for scalping because you don't know exactly the price of what you're trading at. And especially for beginners, I think regular candles are better to learn and to understand. And it's literally the current price of the stock you're trading. We are going to trade on the 5-minute chart or a 50-minute chart. I think this strategy works on the both of them. I'll start with 15. And it's going to be on the pair of BTC USDT. I'm going to do 100 backtests, but first let me explain the strategy again to you. If you also want to trade like us on BYBIT, please use the link in the description down below. You can get a nice bonus, and BYBIT just has the lowest fees and that's why we trade there. I'll see you on BYBIT. So for the strategy we'll need two indicators. I'll jump back to the 15 minutes. What we want to add is the Chandelier exit. It's the one of Everget. And we want the ZLSMA, that's a zero lag indicator. For both of the indicators we're going to change some settings. Let's start with the zero lag moving average. We'll put that to 50. It's just a moving average. We just want it to be 50, 100 or 200. But for this strategy we're going to use 50. And for the Chandelier exit, we're gonna keep this. You could turn off this to backtest it for yourself, but I would like to keep it on this time. And we can just actually disable everything except for a buy and sell label. Like this. So this is what you have to add. And it's really quite simple. When you see a buy label above the yellow line, that means you can take a long entry. So we will buy when this candle closes. That is important because it can repaint. So always wait the candle first. You can set your stop loss on multiple areas. You can use always 0.4%. You can do the last swing low, or you can put it on the moving average or underneath the label. It's all up to you. What I'm gonna do is I'll go just underneath the last swing low. I'll take the swing low of the candle and not the wick. And I'll get out when the price goes through the yellow line again, or if we get a sell signal. So these are our exit positions. So where I would stop is when the candle closes underneath the yellow line. So I would get out exactly, it's hard to see, exactly here. So that would have been a profit of 1.6%, and that's pretty good in scalping. But keep in mind this is the 50-minute chart, but still it's really good. And for the sell positions it's exactly the same, but vice versa. When, okay, this is not a good, let me look for another one, right here. Behind this candle, there's a sell label, you can see that, and the candle closes underneath the yellow moving average, and that is where we take a short position. We take the last swing high, and we'll get out when it goes through the yellow line again, or if we get a buy signal. So this will be a valid position. Oh, and I have to say one more thing before we start backtesting it. When you take a long position right here, that is above the yellow line, and your last swing low is right there. So we place it underneath. You would have gone instantly out if you if it crosses the yellow line, but we will get out only if it goes underneath the yellow line when you're in the profit. Otherwise you just hold on to your stop loss. Otherwise you will get faked out immediately, and that's not what you want. So in this position you would have gotten out right there. That's a small profit of 0.2%, but still it's in the profit. You always had the chance to get more profit out of it, but that's depending on the way how you trade. You can always set like always take the 0.6% profit for 50% out of it and go further with the rest of the 50% of your size. But that's all up to you. For me, I'm just gonna backtest it like this. Like I said, I will get out if I am in a profit and the candle closes underneath the yellow line. So it will be right there. And if this candle went all the way back here, I still would not have gotten out until it would have hit my stop loss. Just keep that in mind. And yeah, that's gonna be it. I'm gonna test this 100 times and I'll get back to you with the results. So after doing 100 trades, it has the worst place in our latest back tests. So it's on the number 10. It was on a 5-minute chart, 100 trades. It took me 45 days. Win streak and lose streak is the same with 5%. Run percentage is 48. But still we had a profit in the end, because you go with your win rate. Your target profit is when it crosses the EMA line. So it can be really high sometimes. But yeah, in the end we had a gain on account of 6%. To be honest, it's not even that bad. After 45 days, it's still worth it. Maybe it works just better on the Chandelier. On what I'm saying, not Chandelier, on the Heikin Ashi candles. But I prefer not to use them in any of my back tests. They are not even that great. They always look great with when you look back into the time, but you don't see an entry or a stop position price. So I still would go for this one, to be honest. So yeah, this was it. 6% profit. If you just like these type of videos, if you want to see us doing more of them, don't forget to subscribe and to like the video. Sorry, not every strategy can be a winner in this one, but at least I'm being honest, and I'm not saying to you that every strategy is the best to use. But in the end, you can always combine them. And if you use this one with your support and resistance and using Fibonacci retracement and combining an RSI with it, it would work great. But just don't only depend on an indicator. That's actually what I'm saying. So I hope to see you in the next one. Have a good day, and yeah, cheers.